Hey guys, in this video I'm going to give you 3 reasons why I love buying credit spreads on red days and why I love red days and why you should too. I'm also going to explain how this helps you as a credit spread trader and how to do it if you stay towards the end. Alright, so anyways, if you ever heard the idea in investing, what they tend to do is they say what's the common saying? Buy low and sell high. The problem is when the stock starts crashing, when the market starts crashing, people get scared, they sell, and they do not buy. And so that's where the emotional side comes into chasing red days. I love buying on red days, but it's very hard for a lot of people to do that because of emotional reasons. They're like, oh no, it's going to drop more against me. It's not going to go in my favor. It may keep dropping. All that is true, but I'm going to show you how to kind of prevent against that if you stay towards the end. But again, I'm going to give you a lot of reasons why it's great to buy on red days. Okay. First off, we have different type of red days, right? We have crashes like this period right here where we see that the market is really just coming down and like crashing in a long term. But we also have little days like these where the market's green and then we have a red day. And the market's green, even though we're uptrending long term, we have these red days within it. So I like to do both. Again, if the market is officially trending down, where like in this instance right here, the stock is moving lower and we know it's moving lower because it's below this trending band, right? It's below the 200-day moving average. It's showing it's trending down. Then on this instance, I would trade call credit spreads and make money on the way down. But if we know the market is neutral or we know the market is trending higher and we have a red day, that's where we look to take advantage of. So that's what I'm going to be talking about in today's video is when we're in a normal uptrend period, but we have a red day. Okay, so when we have a red day like this one or this one, this is how I take advantage of it and why. So again, there are 3 main reasons. Number 1 is increased options premium. Again, this is from the article that I wrote about this. So if you like reading instead of listening to my voice, totally understandable. You can click the link below and check out this article, but essentially increased options premium, right? When the market drops, what happens is the stock is going down. When the stock goes down, number 1, the volatility index goes up. When this is not 100% certain, they're not 100% correlated, but in general, the volatility index goes up. And when that goes up, that means that I can go further out on my credit spreads, so I'm safer, or I can use the same levels I was using, but collect more credit, thus decreasing my max loss size. And just overall, it's a great idea. So if you're trading credit spreads and it's a red day, that is a number 1 reason why increased options premium. You get to collect more money and lower your risk level, or number 2, you get to go out further so you have a higher win rate while collecting still a decent amount. Number 2, you have the opportunity to sell deeper out of the money. I kind of just mentioned that, right? You have the ability, right? Because like, let's say the market is trading at this green candle right here. So if I want to go down, let's say roughly to a 20 delta, I'm just going to say roughly around to this 405 level. Now, when the stock starts moving lower and it starts heading down, then I can also take it the same 20 delta, collect roughly the same credit, but instead of being a 405, I'm now at 403. So that allows me to give myself more of a basis, more of a room, and especially when you're uptrending, it's just a very safe and consistent thing to do. So when I see the market is red that day, I get to buy more things, and it's just awesome because I get to collect more credit. I get to either push out and be safer, or just in general, the market's trending higher. I know it's going to be a great opportunity. And so again, the 3rd reason I mentioned before, which is the volatility index goes up. When the volatility index goes up, this helps you in one of 2 ways. It helps you collect more premium, but at the same time, as this credit spread trade goes on, as the trade moves forward, even if it stays the same, if it just trades flat or trades up or even trades slightly down, this credit spread trade is going to continuously lose money because of how high the volatility index was. And again, the volatility index, because it jumped up and I bought it at a higher level, or I sold a credit spread when the volatility was higher, the volatility will slowly decrease, thus making my credit spread trade more profitable without the market even doing anything. So that is another reason. All right, guys, that is the 3 reasons why, three reasons why you should be chasing red days or looking forward to red days on as a credit spread trader. Now, again, this only pertains to if the market's actually uptrending. If the market's downtrending, don't try to buy red candles. Again, how you tell between this is You simply add the 200-day moving average line to your chart. Essentially, if the stock is above that line, the market is trending up. If the market or the stock is below that line, the market is trending down. So if it's above this line and you have a red day, great time to buy. If it's a red day below it, again, you're going to be looking at call credit spreads to make money to the downside. Anyways, guys, if you enjoyed this video and you enjoy trading credit spreads, smash that subscribe button and hit the thumbs up button wherever it is. It looks better when it's blue. Anyways, guys, if you want to learn about the exact strategies I use to make a 94% or to have a 94% success rate with credit spreads, I give you the whole thing for free, no email, no nothing. Just click the link below to my Google Doc. If you don't want to place these trades yourself, or like you just want someone to send you the alerts, again, I do that linked in my description. All right, guys, see you in the next video.